Hello, welcome to this session hosted by MOFGA, the Maine Organic Farmers and Gardeners Association. This is understanding your chart of accounts for your farm's profit and loss statement. That's just kind of the working title. It's intended to be kind of informal and informative. My name is Nicholas Lindholm. I work for MOFGA as a financial business marketing specialist. And I'm joined tonight by Jim Buckle of Buckle Farm. And we'll both kind of take different perspectives and walk through what the chart of accounts is, how it can bring meaning and meaningful information to help you in your decision making in your farm. And we intend to kind of span every range of experience, from beginning farmers who never even touched any kind of financial record keeping system or knowledge, all the way up to, even Jim, who's pretty experienced and well versed in it all. So hopefully there'll be a little bit of everything for everyone. And I'm personally very welcome to interrupting. So anyone attending, feel free to use the chat or, unmute your mic and interrupt me at any point if you want clarity or details. I'll also try and pause now and then before going on to another section or passing it on eventually to Jim for questions as well. I will start with some slides that I have. I just need to kind of adjust my screen so I can see things. Get the slideshow up. Okay, so here we go. This is me. My contact information is down at the bottom, email or phone. Again, I work for the Maine Organic Farmers and Gardeners Association. My wife and I also operate Blue Hill Berry Company. We're certified organic wild blueberry farm. And in my position here at MOFGA, I'm part of the Farmer Programs Department team, which includes crop specialist, beginning farmer specialist, a livestock specialist. Again, I'm kind of the financial marketing and business specialist. And everyone in the Farmer Programs Department does one-to-one meetings and assistance to farmers free of charge. Some of the work we do also is just networking, like sharing resources out to farmers and other people's. If you just, if I don't know the answer, I will provide you resources to other people who might help, and or other online as well as printed materials. I work here at my desk compiling a lot of useful financial and business farm information, which includes the market reports, price reports. I put together our department newsletter, which goes out to farmers, and an email listserv. I also administer some funding programs here at MOFGA. We have a technical assistance grant program, and we also help administer an organic farmers loan fund. And I also work collaboratively with other ag service providers and technical assistance farm providers, including like UMaine Extension folks, Maine Farmland Trust, Land for Good. There's resources and assets for farmers outside even Maine. I've been involved with a lot of farm financial planning work with key partners in Vermont, New York, New Hampshire as well. So it's a very exciting job for me, but it's also available to farmers out there. So I just like to give a plug for those who don't quite know what I do or what MOFGA, even as an organization, provides for farmers. So with that, I just kind of want to give a brief fly-through intro to some of what we're talking about here. Tonight's topic is really focused around the chart of accounts, and I want to help you kind of understand what that is, where it lives. And I like to kind of start in kind of a flyover view, emphasizing how important kind of financial record keeping is to even the smallest farm. Giving yourself meaningful data in order to make meaningful decisions is so important for a farm. And really poor decisions can be made because of lack of data, and good data naturally leads to good decisions. And I also always like to emphasize that even though farmers often prefer to be out in the field. And, you probably got into farming because you love animals or you love vegetables and you like being out there with your hands in the soil. but it is equally important to come to love, or at least give time to office work, to doing the financial record keeping, to being able to build knowledge and the information to make good decisions for your farm as you move through your life and the farm grows and changes as naturally it will. And tonight, I hope to really show you how organization into all this record keeping, into the data, will not only lead you to certain insights, but also just give you some creative space. Like it actually often frees up space, like during quiet times, if it's the winter for you, or other times where you'll actually realize, instead of just feeling all this chaos and overwhelming, you'll actually be able to see, oh, you know what, this part of our operation is really a weak link. So let me think creatively, focused on this kind of weak link for a moment. So I'll get to an example of that towards the end of my presentation. But the point for the moment being that, good data leads to good decisions, and the organization, how your chart of accounts in particular, is kind of the foundation, is where it starts, where you want to build from. So I did this last week, but I want to just do another quick run through. I love to just remind people of some of the general pieces of any business financial record keeping. And this goes for whether you're a farm or a bookstore or a mechanic's garage or any kind of small business. Any accountant will tell you that there are basically three pieces, kind of tools to the record keeping portfolio for any small business. Income statement, which we also call the profit and loss statement, or acronym P&L statement. I might be using those three terms interchangeably tonight. The second one being a balance sheet, and the third being the cash flow statement. If you're new to farm financing, I keep repeating them because I want you to kind of eventually sink in. You don't have to memorize them. There's no test on this. But if you come to understand these three general pieces, what they're for, what they do, then you're a leg up from where I was when I started farming 25 years ago. And as kind of, oops, I skipped one. As again, just a quick fly through, I'm going to just introduce you to what these three are. Income statements, they're created to analyze what happened. They're usually a look back to the year that you just did in your business. Over that period of time, what your transactions were, what your sales were, the income that you made, and what your costs were, your expenses. And it's a simple, math formula. You subtract expenses from income, and you get to an idea of what the profit or loss from your operation is. And a balance sheet is a little bit different, because it's actually usually a snapshot of your business on a given day. And it analyzes three things: what you have, what you owe, and then what you own. And similarly to the income statement, it's a simple math formula. Your assets, what you have, minus your liabilities, what you owe, is your equity, what you own. And both of these, the income statement and the balance sheet, are really for businesses that exist. You analyze how you're performing. They're not necessarily something that a beginning farmer who is still launching a business will have to predict what these two statements come out to be. So these are really statements that live in existing businesses. And finally, I make that point because cash flow statements can do either. So in one instance, for a business that exists, a cash flow statement can be used to analyze what happened. Similar to an income statement, you can do a cash flow looking back. There's the actual, how money came in and money went out. The thing we really touched on in last week's session on cash flow projections was the second part for businesses that exist, but also new businesses. It's so important to become familiar with cash flow projecting and project what can happen, to look ahead on the coming year and at each transaction, both sales and expenses, and plan for the financial health of your farm. So that's, again, just the quick flyover of the three main tools of small farm financing. Now, I'd like to share a couple slides from a mentor of mine. We had this great opportunity over the past 3 years to take a training with Julia Shanks. who's a pretty well-known author and an independent farm financial advisor. She wrote a book called The Farmer's Office, which I think is actually about the only hardcover book I have in my office. And she's coming out with a second edition this next year. And from her trainings, I have a couple slides which she created, including this one. And she's, I asked, and she's more than willing to have those of us who took the trainings with her share these, as long as, we credit her. And so down at the bottom, you'll see this is, Julia Shanks's. And what I really loved about this is that she created kind of a fictitious ledger. That's what you're looking at, this spreadsheet that shows how these three tools all interact and interface and are related to each other. And I just want to take a quick minute to kind of show you this spreadsheet or ledger is not something that you would create. It actually kind of reminds me of something like you might see it at a goblin at Gringotts in Harry Potter's world, actually, like, sitting at a huge piece of paper, writing in all this stuff. But it actually, is not a template of a document that you would create. What it actually shows going down the left-hand column is like through time with this fictitious idea, just to give you, a picture. Let's say it's a new farm. So say at the beginning of a year, this would be in chronological order. Whoops, oh my goodness. Here we go. You would have no money if you're a brand new farm. So let's say that's in January. And let's say you start your farm business in February, you start with a loan. So looking across, you have columns of your assets, your liabilities, and then your equity. And so if you get a loan for $10,000, that would be a liability. You owe the bank $10,000. But at the same time, you then have, on that same day, you have $10,000 in your checking account. So that's an asset. You have $10,000 in cash, but you still owe $10,000. Now, through time, let's say next week, you buy a tractor for $5,000. That $5,000 comes out of your bank account. So there's $5,000 less cash, but you bought a tractor. That's an asset. It's an actual piece of equipment worth $5,000. So it lives like in an asset column. Let's say the next week you're going to grow vegetables. You buy $2,000 worth of seed. $2,000 comes out of your bank account, and that's an expense. It's not an asset. It's not like a tractor that you can then sell for $2,000 if you had to. It's actually then put on the ledger over under your equity as an expense. You spent that money. Similarly, then when you start selling vegetables, let's say in this case, it's $8,000 of income from selling vegetables. That's cash that you put in the bank after you sell it. It's also then, it's not an asset and certainly not a liability. You don't owe anybody for that $8,000 that you made selling your vegetables. It's revenue, it's income. So it lives under the equity column. And finally, Julia threw in something a little more complicated, even though this is supposed to be oversimplified sample, like depreciation. And that's like something like your tractor at the end of the year is no longer worth $5,000. Naturally, things like that lose value. So there's, accounting through some of these tools where you subtract from an asset, and that's also then showing up as an expense. And so what I want you to kind of look at now are these crazy blocks. And this is where these three tools all interact. So across the bottom in red, this is what the balance sheet is doing for you. It's taking account in a given day at a given time of your assets, which you had $11,000 in cash and you have $4,000 worth of a tractor. And then your liabilities, which you still have that $10,000 loan, and then your owner's equity, which was +8 and -3, so that's 5. And again, the balance sheet is simple math. It's your assets, $15,000, minus your liabilities, $10,000, which leaves $5,000. That's your equity. Now, over on the left in this green column, the cash column, that's what the cash flow statement is. It's basically money coming in and money going out, how it comes in, how it goes out through chronological time, through a year. And you end up on a given day at a given moment with that cash balance. And then finally on the right, this kind of purple box is what the income statement tells you. It's basically money that you've made, your income or revenue, and money that you spent, your expenses, through time, and how they add up and interact with each other. What I really want to just end saying is that this is why the chart of accounts can be so important and foundational, because all three of these are related. The cash flow sheets, the income statement, and balance sheet all intertwine and interact. Any change that you make in a financial transaction can intersect and impact any one of two or even all three at any given time in a year. So getting your chart of accounts organized and consistent from your income statement to your balance sheet to your cash flow projections is just so crucial.
And Nicholas, can I say something about the liabilities as well? Like,
yeah,
something like this seeds and supplies is a good example where that, like some of us who buy buy our supplies at some time of the year, and then we're not forced to pay the bill until, 3 months later, basically. The seed company will give us this, or a fertilizer company will give us a deal or whatever. It's a liability until you pay the bill off. But once you pay the bill off, that fertilizer and seed and all that become an asset to you.
that's true.
In the eyes of some lenders.
Yep.
Yeah. So it's amazing how in 1 month you can go from basically being cash rich to, paying off your liabilities and then become cash poor, but really good assets. And that factors into like when we run the farm, basically when we apply for a loan, when do we look our best? When is our best example of our true assets, liabilities, and equity and cash flow and balance sheets and all that?
Yep. And that's a good point too, because understanding like that the balance sheet in particular is a snapshot at a given day, and you can often choose what day that's going to be. And it's often, the balance sheet is often something that a lender or potential lender wants to see. So kind of understanding that you might print out a balance sheet once a year, or when a lender, if you're looking for a loan, wants one, whereas a cash flow projection is something that's kind of internal to your farm, again, unless a lender wants to see something like that. The income statement is often a good tool to use to file your taxes. So the IRS, although they won't see your income statement, the information from it is often what the IRS wants to see. So yeah, understanding like the usefulness and how these three tools kind of come to life or are important at given moments of your year is kind of important too. Cool. Again, thanks. Yeah, thanks for interrupting, and I welcome that. I can't see the screen because I've got everyone reduced. So like shout out, or if you want to use the chat, I might be able to see the chat pop up if that does. But kind of my last slide before I then go to a sample income statement is this one, and this is again one from Julia Shanks, and I love how she kind of lays out the structure of a chart of accounts. And this is how I coach farmers to set them up. And you'll see this living in the sample I'm about to jump to. But I kind of like to spend a little time with this to those who don't really understand the kind of the scaffolding of a chart of accounts. And so this is how Julia lines out the chart of accounts for an income statement. But I'll also point out that this would also be the structure and how your cash flow spreadsheet should fall out. And most of your balance sheet will have kind of a similar structure, not every single category. But the general gist is at the top of your spreadsheet, you'll have your sales, your income or revenue. All those terms are kind of interchangeable in one sense. So you start with the money that came in, what you sold at your farm. And then the next section going down on your chart of accounts will be the cost of goods sold. And that's a little tricky with farming. It's really simple if you're a bookstore where you buy in some books and you resell them. Cost of goods sold is basically the cost of the books when you bought them at a wholesale price. And you subtract that in an income statement. For farming, it's not so simple. The only simple example I have for farmers for cost of goods sold is if you have a farm stand and you buy in milk from a local dairy or maybe some vegetables from someone else to resell. That's about the only most common place for a farm that cost of goods sold would be used. Some accountants will tell you otherwise and might say to put your variable costs up in cost of goods sold. So I'm not saying there's a right or wrong to this, but I kind of side with Julia Shanks with this structure, where your variable expenses and direct operating costs usually live better further down and not in cost of goods sold. So moving along, gross profit is basically your revenue, your sales, minus that cost of goods sold. That brings you to one number. Then you start with your expenses. And I like having these big major categories or parent sections to an expense sheet on your chart of accounts. Most of the variable costs that go into producing your farm goods would be under direct operating, but then you want to have the labor separate from that. Occupancy is just a term that means like if you have rent or utilities. General and administrative would be mostly your fixed costs, things like your insurance. If you're certified organic, then it's your organic certification fees. Maybe if you have an accountant or legal fees for incorporating, that's kind of general and admin costs. Repairs and maintenance are kind of self-explanatory. Julia likes to put in these one-time expenses up here too. That's like if you're buying a hoop house or a one-time big expense that impacts that year's income or cash flow. This might be a place to put it too. That's a little aside. The thing that I really love and which I've become the champion of promoting is now you get down to here where you subtract your expenses from your gross profit, and there lives, this is where this whole idea of a green line originated, is right from this slide. I talk a lot about the green line, and in your chart of accounts, having this green line, so everything above the green line that we just looked at is your core farm operation. Everything that is in this section should only be limited to what activities you're doing to grow, produce, and sell farm product. And so that keeps all your core farm operation together in one place. But of course, we all do several other things on the farm. There's other sources of income. There's other expenses. And so below the green line is then where things like grants or loans, other things like depreciation, and of course, if you take an owner's draw or other kind of cash outflow that isn't directly relating to that farm core operation, that's important to kind of put down below this green line so that you can analyze what is driving your profits or losses. And that's the key structural piece that I really want to drive home, that to have like grant income up here can falsely lead you to believe, oh, like this was a good year, we actually made money. Going by Julia's structure, and I'm going to illustrate this now, moving on to a sample spreadsheet, if you're actually only making a profit because of a grant, this type of organization in your chart of accounts is going to highlight that really quickly. It's going to show you your core operation actually lost money, and the only way in this fictitious sample is that that grant got you through the year. So I'm going to now leave my slideshow and go to a couple fun spreadsheets. And I say that a little gleefully because I've come to really love spreadsheets. Let me just get to it. And see if I can, this is just a Google sheet, so it's not a slide. I'm going to try and make it as big as possible so folks can see it. Looks like it might be as big as possible there. Is that suitable for folks? Give a shout if it's not looking too good. With the caveat that I know looking at a spreadsheet in a webinar isn't the funnest thing to do. But I hope the way I've set this up, and we'll kind of move through, I'll be pointing out, things that I want you to see. I do notice there's something in the chat, if I can bring that up. A question. Thanks for the question. Will this presentation be available to us afterwards? Yes, yeah. So we are recording this, and after the recording gets edited, we'll share it out not only to everyone who registered for this, but MOFGA keeps a YouTube channel of recorded, workshops and webinars. So I would hope eventually it would live on our MOFGA YouTube channel as well. So similar to last week, I created a fictitious farm. So this is not a real farm, but it's based on my own experience farming and looking through a lot of profit and loss statements with small farms. So I kind of came up with this farm, Entropy Farm, and over in this little orange box, I kind of just give a little story. Entropy Farm grows 2 acres of vegetables, has a small flock of laying hens, and buys in some milk from a neighboring dairy farm to resell. They sell the milk, the eggs, and their vegetables at their own farm stand. Plus, they attend 2 farmers markets in their area, and they sell some of their vegetables wholesale to a few restaurants and another farm store who resells their produce. They certify their vegetables as certified organic, and apparently the eggs and the milk are not. So that's kind of a little bit of a backstory. And so to kind of start looking at a chart of accounts within the structure of a P&L statement, column A in a P&L statement is basically your chart of accounts. So based on that slide that I just showed you from Julia Shanks, we start at the top with the income, the money that you made from your core operation, from buying and selling produce. You'll notice, I should have said this at the beginning. So this is what I title as kind of a messy chart of accounts and a messy P&L statement. And I'm going to move towards a tidy one. My second sample will be me cleaning it up. So what I want to take this slide to show you is what a messy chart of accounts looks like. And quite honestly, my farm looked like this at one point, and I'm sure a lot of farms do. So this is not a judgment at all, but more a chance to illustrate, okay, this is how it can be done, and there's nothing necessarily wrong with it. But I hope to move towards organizing it to give you meaning through this illustration. So looking through their income section on their chart of accounts, it looks like, yeah, there's a couple farmers markets in here, some restaurants. There's their farm stand. Oh, wait a minute. There's a grant that they put in here. And their certification cost share. So when you're certified organic, the USDA and MOFGA have a cost share. You get some money at the end of the year back. So that's income. Oh, and looks like they got a tractor loan. And oh, right down at the bottom, here's where they account for their milk and eggs. So the organization to me immediately is like, whoa, this is like all over the place. It's not even alphabetical, let alone they have a whole bunch of like categories, or the rows are market channels. So that's the amount of money that they made at farmers market and through the farm store and selling. But then they also have a couple enterprises. So they're mixing the market channel organization with just individual enterprise organizations. And as a chart of accounts, it's better to choose one or the other. And I'll address that, in a little bit after I start cleaning this up. So after the income section comes the cost of goods section. Here it looks like, so they must use Square, the card reader at the farm stand and maybe farmers markets. So it looks like this farm has put their Square processing fees, because Square takes out like 2.9% plus a little more per transaction. So they've put in as a cost of goods sold that Square processing fee. I find that kind of interesting. Not necessarily wrong, but I will use that as an illustration in a few minutes to show you a better place to put it. So after that section, they subtract the cost of goods from their income. So they've got their total operating income. That's kind of like the money that they definitely made that should have at least gone into their bank account at one point. After that section comes the expense section. So looking at their expense section, it looks like they have some good organization. They have first the variable expenses, and then if I keep scrolling, sorry if I make you dizzy, they have their fixed expenses. Okay, and if I start digging into that, a few things kind of jump out at me though. So let's go back up to the variable expenses. In here, they've got like their milk purchases. So again, they're buying milk from a neighbor farm, reselling it. So for some reason, they just threw their milk purchase expense into variables. They've kind of got some vet bills and stuff associated, obviously, with the laying hens, like grain, fencing, vet bills. It's all intermixed with the vegetable expenses. And going down, then looking at their fixed expenses, they've got their actual loan payments in there. They actually even put their payroll taxes in here, which is associated with their labor. If we scroll back up, I think I saw that their labor, so they have their labor up under variable expenses, and then their payroll taxes for some reason under fixed expenses. And some of these are just rookie mistakes. Nobody told a farmer when you started farming how to organize your chart of accounts. So again, I'm not making judgments. I'm just like observing at this point and trying to understand where their chart of accounts is at. And I can tell you it's pretty messy. Because also in this section, they've got some grant expenses. So we saw up under income, they had some grant income, and now here's what they spent that money. It looks like it was that produce safety improvement grant that MOFGA administered. They bought some totes and stainless steel carts, and that's here in their fixed expenses this year. So finally, I kind of just want to get down to the green line so they total their expenses, which came to 90,000 according to how they have this chart of accounts organized. And it shows that their farm operating profit, expenses minus income, was 48,000. Well, that's pretty decent, especially for, what was it, 140,000 in sales, according to what they said. Yeah. So according to what they said, they had 140,000 in income, and their profit of that was 48. Well, that sounds pretty decent. And then finally going below the green line, which they took an owner's draw, and then they account for buying that tractor. We saw that they had a tractor loan, and then they actually then used that to buy the tractor. So that takes out 40,000 from their 48,000 profit and left them at the end of the year with $8,010. I'll pause there because I see there's something else in the chat. Yep. So they're just more about the recording. Yeah. So we are recording this. It will be made available to folks after. And so I'm going to just quickly highlight in red. I'm going to jump to the exact same statement. But what I did is I took my red pen and I highlighted in this version everything that I see it needs better organization. I'm not going to say again that there's right or wrong, but there's better places for a lot of things. And in red, you'll see what I'm going to move around and reorganize. Again, I think I mentioned already that grant shouldn't be up there. The organic cost share shouldn't be there. The tractor loan shouldn't be there. The milk and egg sales, I'm just going to kind of try and play around with, and I'll get to kind of a useful spot for them in my tidy example. So just, again, kind of scrolling down to show you, there's a bunch of red that I'm going to be moving around. I think it's not in a good place for your chart of accounts organization. And whoops, sorry about that. And I'm going to show you how putting it in a different organization is going to change much of the numbers, including this gross operating income number. But you'll also notice at the very end, the net profit is going to be the same. So here we go from the Entropy Farm messy sample to the Entropy Farm tidy sample. I've tidied it up a little bit. I've given it some organization. All of the categories in this first column in the chart of accounts, I pretty much left the same. I just moved them around a little bit. And I then created some parent categories and some actual kind of scaffolding structure to each section. So one of the first things I did with the income section is create a wholesale sales and a retail sales parent category. And that is then each section is subtotaled. So you can get an idea of like, of all your market channels, wholesale, adds up to a certain amount, and retail adds up to a certain amount. That can give you, some useful information, which we'll get to in a little bit too. But other than creating these categories and then moving things around, I left it pretty much the same. Again, in red is stuff that I moved around a little bit, and you'll notice I took out, and we'll see later further down, that grant income and that loan and a few other things like that. So right now, what you're seeing in this income section is just the core farm income. It's just what they made from having a farm, a vegetable farm, some eggs, and buying in some milk that they sell at their farm stand. And so the income is no longer, if you remember, it was 140,000. It's actually 101,000. And that can be even in your own mind, let alone talking to a bank that might give you a loan. That's a big difference. Like, you're not really a 140,000 vegetable farm, you're a $100,000 vegetable farm. And again, there's nothing wrong with this. It's just like how you understand and talk about your farm and focus in on certain decisions are impacted by the kind of information that your chart of accounts can be telling you. So the next section, I made a big change. I actually used this section, cost of goods, in the way that I indicated earlier, like, okay, they buy in milk from another farm and resell it. That's cost of goods. And so I put that milk purchases line right there. Again, I didn't change the numbers of it. I just put it in a different place. And I moved the square processing fees out of that place and put it somewhere else that we'll get to. So your actual gross profit, which again is just the core farm operation, is actually 99,000. A lot different than that 140,000 that the messy sample was telling us about. And now to keep going down to the expense section of the chart of accounts, again, I kept all the same categories. I just moved them around and organized them. I put them in alphabetical order, but I also used those main parent categories that Julia Shanks's slide illustrated. Under expenses, direct operating expenses, which are expenses directly related to the farm operation. So it's things like supplies, fertilizer, soil amendments, car and truck expense. These are all variable expenses. These are also where you kind of might start touching base with the IRS a little bit. These are all categories from Schedule F, or if you're an LLC or like me, an S corporation, you have different IRS forms to report your taxes. But, supplies, fertilizer, soil amendments, car and truck, gas, fuel, and oil, these are all generally recognized farm expense categories that are variable expenses. I like to point this out, that the chart of accounts should not be set up just like your Schedule F is. That's a mistake I made 25 years ago by an accountant who didn't really know much about farm accounting. And I lived with my profit and loss statement for a long time, just organized into my Schedule F categories. Here is about as close to the Schedule F categories as I would coach a farm to get under a bigger parent category. And you can still subtotal each of these, because that helps when you're filling in your Schedule F. They have a line for supplies, and you can say, oh, okay, right here on my chart of accounts for 2023, there's my supplies, and there's my fertilizer and soil amendments. And you can get into a lot of detail here, and I actually want to caution you from having too much detail. I would think in a farm, even of this size, a profit and loss statement probably shouldn't capture all this detail. It should probably just have supplies total, fertilizer, soil amendment total, car and truck expense total. But I wanted to take this messy profit and loss statement, use the same categories, and just organize them. So this section, especially direct operating expenses, has a lot of detail to it. And again, there's no right or wrong, but There can be a place where if your chart of accounts gets to be like, 150 rows deep, and if you print it out, it's 10 pages long, that's probably too much detail. And it's a fine line. I'm not going to, hold any grudge against anyone who keeps it simple or anyone who keeps it long. I'm just pointing out that there's kind of a fine line between getting too much detail into a profit and loss statement or into your chart of accounts, and balancing that with just the right amount. The key part of it to me is organization, is the structure. If you have a section with direct operating expenses, awesome. And if that's also then living a little separate from another parent category of labor, awesome. And another one here, repairs and maintenance, great. And so those three categories I've kind of laid out here in the tidy version as the variable expenses, and I subtotal all of them right there. And then the next section, I took all the fixed expenses, and using Julia Shanks's parent categories, we got your general and admin, which includes things like insurance, there's the certification fees, and I think farmers markets fees that they pay, legal and accounting. And then here's this final category of expenses, occupancy, which looks like they pay some rent and have some utilities. So I kind of want to now just jump down to the green line. You might remember that, well, let's go back to it. In the messy version, what was the total expenses? Total expenses were $90,000 in the messy version with a $48,000 gross income. Now that I've reorganized it, it's all the same numbers, just reorganized. Actually, their farm expenses were $73,800, and their gross income was actually only $25,000. That's a huge difference to realize, what, here you're thinking, oh, wow, we got $48,000. So yeah, they probably made the decision late in the year. Oh, that means we can take $10,000 owner's draw, which, was just $10,000 the owners took and put in their bank account. And here it's kind of a different story. It's almost half that amount. It's not 50,000, it's only 25,000 that the core farm operation actually made. And other activities did a lot of other stuff for the farm, good and bad. I mean, there's just information here. There's, again, not judgment. I organize everything under the green line as either income and expenses and kind of subtotal them. So you can see this is where I put the grant. This is where I put that cost share. And this is where I also put in the loan that came in as income. And then this is also where I then took out the loan payments. This is where I put the Square or other kind of credit card interest and processing fees. And this is also where I dropped in the grant expenses, which kind of wash out with that grant income. But it's better to live under the green line where you can isolate what the farm itself was doing that given year. And you'll see at the very bottom, it's the same net profit. You still made $8,000. But at this point, it's kind of a different perspective. Like, you had $25,000 for the core operation. Was that such a great idea to do the $10,000 owner's draw? I'm not going to say yes or no. I'm just going to say what this organization of the P&L statement is telling you might make you think differently or make a different decision. It can help drive decisions. So I've got two other points I want to make, and that's to other organization that I did to this. And the first is this column C. And this is really cool information. And I encourage you, once you get a chart of accounts, and in this case, in your P&L statement organized, start looking at what the percentage of sales is for different, especially major categories. You could do line by line, every single thing as a percentage of sales, but I look for some more meaningful things. Like for income, this, the way we have it organized, this tells me our wholesale sales are 30% of our total sales. So 31,000 is 30% of 101. And the retail sales are about 70%, And then I also even just did a separate calculation for the farm stand, because I found this curious. So 34% of their total sales is from the farm stand. So, what does that mean? Well, say, they felt like they had like that $8,000 profit, and they felt like, well, the mobile chicken coop that they have for their laying hens, it's kind of rickety. Maybe they should kind of make or invest money into building a new mobile chicken coop for the flock. But also the farm stand roof is like leaking on rainy days. There's water dripping in the farm stand. You kind of have to make a financial decision. Which should we fix up? And I'm looking at this information like, wow, you get 34%, 1/3 of your whole farm income comes through the farm stand. You better fix the roof on the farm stand. Like, that's a higher priority than the chicken coop. So again, there's no right or wrong. It's just information. And going down, it's really cool to look at your expenses as a percentage of sales. And here's where I see like huge red flag as I scroll down. Sorry if I make everybody dizzy, but I want to bring you down to labor. So this didn't show at all in the messy version. Now that I've got it organized and done this percentage of sales, holy moly, their labor budget or their labor expense at 49,000 is 48.8%, basically half of their sales. So they are putting out a lot of their income to pay for labor. It might work. It's still an profitable farm. They still covered all their costs and had $8,000 net profit. But boy, that's pretty high percentage for a small farm for labor. Now, I'm doing and Mofka's doing a lot of research on trying to find, well, where's the sweet spot, particularly for labor? In general, it seems like a lot of Maine's organic farms can get somewhere between 30, maybe 40% of sales in labor. That seems kind of normal. If you're lower than 30, I think that's great too, but maybe you're mechanized and stuff like that. But this kind of financial benchmark is really great information to have. And if you know your labor budget is 48.8% and you go talk to other farmers or just other non-farming businesses and compare, it's good to kind of have conversations about where you're at and compare, and then have information to like analyze, what can we do about this? Is this something to be concerned about? And I kind of want to finish up by showing you that, your expenses, which looked pretty bad in the messy one, are actually, pretty okay. And that the core farm operation, even with that awful labor percentage, still ends up with 25% as a gross profit margin. And that's pretty decent. That's an okay business that's making it. And the last thing now that I want to get to, I'll pause because I noticed there's something else in the chat. Oh, good. A question about depreciable fixed asset. Yeah, that's something that on like Julia Shank's sample slide, she had that one-time expense. And I might have mentioned like, that's a good place if you buy a hoop house in this year. And that could be a place where a depreciable fixed asset like a tractor could live. Some of it depends on what you want to see and who might also be seeing it. In the real world, accounting would want to put a fixed asset on the balance sheet, and that's actually where it would show up. In a small farm, real world, it can go on the profit and loss statement. I would put it under the green line myself. There is reason, and again, with Julia Shanks's example, there is reason you could put it even above the green line, especially something so direct and directly impacting the financing and the financial picture of the farm, something like a tractor or a greenhouse. There's good reasons to put it in. What's lovely about either a Google or an Excel spreadsheet, as opposed to like a pencil and paper ledger and or even QuickBooks, in spreadsheets, you can actually put it in there and then take it out pretty easily too. Like you can have two different living profit and loss statements, and not that you're trying to hide something from the IRS or pull the wool over somebody's eyes, but you can copy this spreadsheet into another tab and then put in the tractor and see what it looks like, or try and imagine with that tractor you'll save labor. So on a separate tab, you can be playing around to try and make some financial decisions and improve your financial picture by including things like the tractor into the P&L statement. One last thing is hopefully I'll just blow your mind. I took the liberty of trying to address this discrepancy, especially in their income chart of accounts, where they've got most of it organized per market channel. That is, going to restaurants, going to the farm stores, things like that. But then they also have the milk and eggs. So it's kind of like, how do you match up your market channel financing with your enterprise? And a lot of small farms in Maine have several enterprises. And in this farm, it looked like they had their vegetables, and then they were selling some eggs, and they were selling some milk. If you use QuickBooks, then the desktop version and some of the more expensive online versions allow you something they call classes. And classes are, for a farm, exactly this. You can use classes in QuickBooks to itemize every expense and every income into your enterprise. So in QuickBooks, you could think of classes as enterprise. And by enterprise, I mean like major category of crop or farm product. So vegetables would be an enterprise separate from eggs, or if you raise pork, or if you have flowers, those are probably good to keep as a separate enterprise from vegetables. And so this farm seemed to have, to me, vegetables, eggs, and milk as their enterprises. And we have the chart of accounts mostly organized by market channel. So what these three columns do now that I've created by enterprise is you can assign every income and every expense to one of those enterprises. And some of that's pretty easy. Like for this farm, they sold pretty much everything through wholesale, as well as a lot of the retail sales were vegetables. So I carried over those numbers. It was pretty obviously, the milk sales and the egg sales. Okay, well, that's why I created those columns. And so then that allows you to analyze or look at those three categories. Here we're looking at the income, and you can then also do a percentage of sales of those. So you can see 96.6% of this farm's income is from the vegetables, whereas the eggs are under 1% and the milk is just 3%. Just good, good to know. Okay, we'll kind of go back to those percentages in just a minute. The next section, the next section, cost of goods, was just all milk. So that lived over here. So under the milk category, I now actually have the gross profit of the milk. So all this activity that they do with milk, it only brings in actually $900 of profit, which is still more than just 450 of eggs. But it just starts giving you a little bit of perspective of how your different enterprises are impacting the whole of your farm. And that really comes strong into importance when we scroll down and look at the expenses. And I just want to spend a few minutes kind of going through how I categorize some of these expenses into enterprises. Again, some of it was easy, like potting soil and seeds and row covers. That's all vegetables, duh. Something like the gas, this line was like putting gas in the truck to make deliveries and stuff like that. I chose to spread the $2,500, which was the total gas expense. I chose to distribute it across the three enterprises as a percentage of their sales. So going back up to where I calculated right up here. So I'm going to allocate that gas expense. 96% of it will go to vegetables, 0.4% of it will go to eggs, and 3% to milk. And that's just kind of a shot in the dark guess. It's not exact, but that's probably the best way to start spreading some of these expenses, especially when we scroll down a little further and look at the fixed expenses. This is exactly the easiest and quickest and pretty accurate way. Just allocate these kind of costs across all the enterprises on a percentage based on the sales. You can also, here we go, down to small tools and equipment. I chose to look at these as actual expenses that we had receipts. So we like went to Home Depot, bought a bunch of hoses. For the total, we spent $425 on hoses. Oh, but one of those hoses we used to run out to the mobile chicken coop to water the chickens. So we'll actually allocate from the receipt. We can say, okay, so that one hose, $50 goes to eggs. Similarly, they bought some tools, maybe they bought a hand cart to help move the mobile chicken house for $100. So we'll allocate part of that tool line to eggs, whereas most of it was actually like a new seeder for the vegetables. So that's another way that you can kind of break up some of the expenses across different enterprises. And again, using classes in QuickBooks does that automatically. But if you're using Google Sheets or Excel, your own spreadsheets, just do this, just build some columns over to the right of your P&L statement. And this stuff took me about an hour this afternoon and gives me all kinds of cool information. Just scrolling down, obviously all the livestock expenses go to the eggs. And then we get to a bunch of the fixed expenses, which mostly I did this percentage of sales calculation to spread it out. I chose like one specific example of doing both. So this line has the dues and subscriptions, which I'm going to kind of scroll across, which to me meant that their organic certification fee, which was just for vegetables, that was $1,200 of this line item. $1,200 goes all to vegetables. The other stuff was like a Maine Farmland Trust membership and some farmers market fees. So for that remaining $250 on this line item, I allocated that section, that portion, using that percentage of sales method across all three. So those are just, I'm kind of getting into some details, but just to show you some quick illustrations of how these, categories can be allocated across your different enterprises when nothing is exact, but you still want to get close and get down to some real meaningful numbers. And that's where we are now. Still above the green line. I'm not going to go below the green line with the enterprises, because right here, it shows us that, wow, the veggies actually were pretty profitable. They even made more profit than the whole farm. Oh, because the eggs and the milk, both enterprises lost money. So there's information there that jumps out because of how I organized this chart of accounts and started looking at the numbers in divided ways. And that doesn't necessarily mean that you got to stop selling eggs or stop selling milk. That is where, in a quiet moment, you can start thinking like, okay, rather than living in this entropy chaos of a farm that seems like we're doing okay, we made $8,000, you can actually say, we could do better. Maybe all we have to do is raise we're buying milk and reselling it. Maybe if we just raise our price at the farm stand 25 cents per bottle or something. And it doesn't mean like you have to stop doing the eggs. The eggs might have more value to the farm than the numbers. You have a farm stand, you want to have some animals. So when families come to the farm stand with their kids, they can go look at some animals. They also, the chickens will be producing manure that you might be working into your compost that goes on, and they may be grazing out on your cover cropped part of your field, which in 2 years will be vegetable in your crop rotation. So again, there's, no right or wrong, even though enterprise might be losing money. My point is, if you can organize your chart of accounts to give you information like this, that's going to lead you to make good decisions about where you can, make some investments, make some improvements, make some marketing decisions. There's, many kind of points that I've showed on you in the spreadsheet that are kind of red flags and or reasons to get excited. So that's where you kind of want to focus, your thinking time. And with that, I will pause, ask for any questions. I will stop sharing my screen. That's all I prepared. And if if everyone's okay, I will pass it over to Jim Buckle of Buckle Farm. Does that sound good?
Yeah, I'm good with it. Thank you for those slides, Nicholas. So I'll give you a little background of what we do. My wife and I grow a little over 11 acres or so of organic vegetables with a little bit of fruit. We operate it on very minimal labor, and we use a lot of machines and deal only in the wholesale side of things. So our chart of accounts is fairly straightforward, but what I really wanted to talk about was like how to use these as tools, and then and then give some points about each one of the things that Nicholas went over to kind of give an idea of how we utilize them on the farm. So we had go back 10 years when we started the farm here. I started the farm in Massachusetts, and we moved it up here 10 years ago after like 2 or 3 years of operating down there. We moved up here, and we were keeping no records unless they were mandatory by MAFGA certification. So it was like really bad. And then we go to the tax person every year, and they'd be like, "What have you done? I don't know anything here." And we hand them like a box of receipts, and they figured it out. But what we realized is after 4 years of operating like that, since we didn't have these tools in place, we were making really, really bad decisions. Decisions about lending, decisions about when to pay bills, how to pay bills, what to pay, what to invest in. And then lenders, after like 4 years, were like, we can't go any further until you figure out what you actually have as a business. So it really straightened out using these tools, how immediate you can access information to make decisions. So a season like this one, where it has like rained like 65% of the days we've had, this year to grow anything, it's rained a lot. And so we're using it as a year to figure out like what's really costing us a lot of money and what to adjust the prices, because the enterprise budgets we made in the winter called for onions to be like one price. But then, we're here now, and the amount of labor, time, energy we've had, and fertilizers and cultivating passes and packaging costs all changed a lot. So we were able to see all the parts that the onion actually needed to go up like 20% than what we had originally figured to make money. So we have increased the price on that because we had these tools. Because had we sold it at the proposed budget, price back in February when we had sealed up our budgets, the enterprise budgets, we would have lost money. So, and that was like that was done all through like prediction cash flow statements, and then like also looking back on the prior year's cash flow statements and figuring out exactly what we spent on the onion over the years. And then using our enterprise budget, which we built with a consultant. So like when fertilizer went up from $1 per pound, whatever the price was per pound, to another one, we entered it and it changed our pricing model for us. And all of that led to us having a much better P&L right now than we would have had we just like ignored the numbers or not paid attention to the numbers and marched forward into the season. So I'm a big fan of QuickBooks. My wife is like a QuickBooks queen, I feel like, and does things on it that I don't particularly understand. But I do know that the chart of accounts. We originally had an accountant set one up for us that made sense to the accountant, but made no sense to us. So even the first year of having all this stuff, we were like, ugh, what are we doing? And like Nicholas showed, there were all the categories you wanted to see. So, and QuickBooks allows you to build on those parent categories. We prefer a lot of data. We prefer to know like exactly when things are happening and exactly when things are going bad and exactly when that turning point was and why. And so we spent a lot of time on enterprise budgets throughout the winter working on that. And then like trying to model out all of our P&Ls, because at some point we have to borrow money twice in a season. So we borrow at the beginning to get going, and we typically borrow at the end on a piece of equipment or structure on the farm or some longer term capital investment. And so the chart of accounts is set up exactly how Nicholas had it. Was, where is my income derived from? It's all wholesale. It's very tiny amounts of other things. So we're actually a little opposite from what you showed. And then it showed, what did it cost us to do that? And then what is it, the liabilities after that, and all the office expenses. And we include on our P&L, we see all of our loan payments and everything we have to pay. We're going to pay out, we're expecting to pay out. And where that helps us is that we can see that we have so many dollars in bills due every week. We pay our bills every Monday. So when we built that cash flows, when we built that the chart of accounts, it led to a P&L that allowed us to analyze what debt, whether we're in debt or not in debt, and to the tune of how much and to whom, and then that led us to a balance sheet, which I admit I'm not as I should know a little bit more about balance sheets. It's more Hannah's department, but it is amazing how you can be kind of in debt pretty bad, but if you have a lot of assets, your company is actually worth quite a bit of money. Like if you look, I think we are, I consider ourselves a small farm, but apparently we have like $700,000 in assets that I don't know where you find them on this farm or where it is, but we also have like $250,000 in debt. So we look like we're asset positive, which lenders love. That means they got all the collateral they need to get their grubby little hands on before we pay them. And it also helped us advance the farm. So we knew we couldn't, until that balance sheet was positive, we knew that we couldn't make any moves, and we had to work really hard on cleaning the balance sheet up to get it to a positive number. And now it's, after a few years, it really speeds up fast. And then let me think. I'm losing track of myself. Sorry. The important part that I like to use in these P&Ls is I'm always worried about money and cash flow. That's my constant concern, is how many crops are in the ground, who do we owe money to, and when, and when do we have to pay those bills, and how much do I have to have? So every week we produce a list of bills off of QuickBooks, because the bills get entered ahead of time, so you know what's coming. And then we also know how much every week we're going to spend throughout the season, so we can have an expected amount of gross sales. We know every week we have to sell close to $6,000 in vegetables for so many weeks on end. And then we know on the backside of the season, we're going to spend so many dollars a week with zero income coming in. And so all of these things start to help you make really valuable business decisions. Like we were saying before, when do you take the snapshot of your company? When do you show that to a lender? Or like a grant that comes up, you have to prove you have the capability to do the grant that they're asking, like purchase the hoop house, purchase the bins before they pay you back, or like any NRCS project. You want to know that you have enough cash on hand before you sign the contract with the NRCS that, is going to cost you $30,000 to install irrigation, but they're going to pay you back. So these tools help to know, when can I start that project? When can I manage to pay for that project? And when is that project money going to come in to pay it off? That way you don't have to worry. Then you get to do the job that you know how to do, which is farming. We do all this insane work all winter so that I can spend the summer farming and farming only, and not think about which bill or what company or who owes me what, because we set up a system with these tools. At first was very simple, but now is really complicated. But it relieves the stress of the background work so that you can just be stressed out just farming instead of stressed about everything going on in your life. And then once we did that, these tools allowed us to actually become much better farmers and much better marketers, and have higher quality product, and be able to sell to more channels, and be able to communicate more clearly with people, because we're not so worried about the financial side of it, because we made a plan that we're sticking to. And so when someone calls and says, well, I'd like to buy, 8,000 pounds of onions, you can say to them, great, they're going to cost you this many dollars. And we can have them to you on this day because we know what our labor costs are, how much labor we need on base every week, how much the packaging for the onion costs, how much it costs us to raise that and truck that amount. And that all comes from all these things that, Nicholas just laid out in a very simple form. So the more complicated you want to get with it, it's you have to remember you got to put good information in, because good information in produces good answers. But it's definitely a challenge to get it going. But once it's going, it's well worth it, I would say. And we're still building things. We're not quite to like the peak performance of our accounting, I would say. We also hired an accountant, which was like a huge help, because while we can do the winter work, we can't keep up with the month-to-month reconciling. And like even just making payroll every 2 weeks for the little bit of labor we hire, it's easier for us just to pay someone to do it correctly. But they always give us like the information we need to make decisions so they can execute the decision for us, or we can. If people like questions or like particulars about how we use these tools, or
Yeah, Jim, I like how you pointed out for your farm, your income structure sounded like, since you're all wholesale, the way I kind of structured my sample entropy farm was by market channel, wholesale, retail, and where it was going. But that's not the only way. You could do it by enterprise, it sounds like, or even
we do it by enterprise.
by vegetable, like you have income onions and potatoes.
Income onions, butternut squash, and potatoes. And then I think after that one, everything after that drops below a certain dollar amount. I think it's less than $7,000 in sales annually, and it drops onto like a miscellaneous list. Mm-hmm. But in QuickBooks, if you open that, it will tell you every little tiny thing we sold. But we just see that one thing as miscellaneous. We know that's the other like 5 or 6 things we grow on a regular basis, because we need to know the heavy hitters at the top, because that's what's driving 92% of the income, onions being half of it. So that onion number is, I don't necessarily care who bought the onion. I just need to know the onion sold,
Yeah. No. That's great too, because that's a good contrast to what I showed in my sample. And again, there's no right or wrong. It's just like different type of farming things. And I'll then just bring in, my farm is just wild blueberries. So I just have one enterprise, and I actually have my income set up by basically product size. Like we sell 10-pound boxes, we sell 5-pound boxes, we sell fresh, and we also sell frozen. So my income categories in the chart of accounts are actually kind of by that, but that's special to my farm. And so you could, like you, Jim, if you have your chart of accounts organized by enterprise or by crop, then maybe you could use classes, or the columns that I had set up in the spreadsheet could actually be market channel or buyers, even things like that. Yeah. So just, I bring that to the webinar just because I know each farm is different, and everyone out there listening could like think, oh, like my farm might actually have it a little different. And
ours, if you like open onion, it will say the color, the type, if it's bunched, if it's trimmed, if it's fresh, if it's a 40-pound or a 35-pound box, 50-pound bag, 25-pound bag. The more you want to know, the more it will tell you. And the enterprise budgets that we build are will show in those categories. So like you open up the Google sheet that's the enterprise budget, you open up QuickBooks, and they're all organized exactly the same, and you can look side by side and say, white onions bunched. We wanted to sell 1,900 bunches in, let's say, July. Well, QuickBooks will tell us if we did that or not. So if it exceeds 1,900, we don't change the enterprise budget, at all the next year, because we only want to do so many. But if something starts to fail, you can really see it like, and then we'll do percentage of onion sales. So if it's like Ailsa Craig bunched onions, if those numbers are starting to drop below a percentage, well, they're not towing their weight, meaning they're using more fertilizer than they should, because we have to sell them for less money. So the fertilizer cost for that one onion goes up. So we may want to change that to the profit, one of our more profitable ones, so
Yeah. Did
I think
did
there's
you
some
see?
questions.
Yeah. Did you see those? Yep.
We'll see.
I'll read them out so they're in the recording too. So someone's asking, Jim, are you using the class codes in QuickBooks to distribute both direct and overhead expenses for each product? So do you use classes in any way?
No, because we use, and then I think the next question in there ties into the same. No, my wife and Jed Beach built this insane enterprise spreadsheet that um, is a bit challenging to stare at after a while, but uh, we put all of our information in there that's like how much of one pesticide or fertilizer or seed go towards that crop. So then when we have that sorted out, like, yes, that will be profitable. We know in QuickBooks when we just put in fertilizer, we know that it's being used on all the vegetables, but there's another spreadsheet that tells us exactly how much fertilizer went to an onion or butternut squash or cabbage or whatever it might be. So it's like two different sets of books.
Yeah.
One tells us the nitty gritty detail, and QuickBooks keeps us informed in cash flow, because I don't like buy fertilizer and then plant my onions and then buy more fertilizer and then plant my cabbage. We've bought a tractor trailer full of fertilizer and it's being allocated all out by the pound, metered out by the pound as we spread it and stuff like that. So
Yeah, that's great because it touches on a little bit, I think, of what I said, I
it
lost
also
my
keeps
train of
our
thought.
accountant sane, because like if she's
Yeah,
reading every little detail in QuickBooks,
yeah,
it's just too much information. Like she doesn't need it, and we don't need it to account for the profitability of the farm because we've
yeah,
accounted for it elsewhere. So as
yeah,
we're paying the bills, like I know that I'm buying fertilizer in April or March for crops that I'm not planting till like 2 weeks ago. So I know I'm like carrying expenses, or I'm carrying debt is what I'm doing, is I'm borrowing money to buy all my stuff, carrying the debt all season, and then paying it off in the end. So it's not quite normal accounting, I don't think. When it gets
right,
paid,
right.
how it gets paid. Yeah.
It's the difference of a farm versus like a bookstore, almost, in a sense. Yeah, you're
Right.
not really carrying inventory, but you're carrying costs. But you saved money by buying the tractor trailer full in March.
Right.
But yeah, I remember the point I was wanting to say is what you illustrate good is how I was talking about how much detail do you want in your chart of accounts, especially in a profit and loss statement. And your
Yeah.
example says not too much. That
Not too
detail
much.
lives in a separate spreadsheet, like in your cash flow and in enterprise budgets, which that's a whole nother webinar. Enterprise budgets are such another kind of fourth tool, though they're not in quite the same category as your profit and loss balance sheet or cash flow projections.
And the enterprise budget takes we used to do like hundreds of CSA shares, and enterprising that out was like the worst nightmare of my farming career. I think, like, other than almost going bankrupt like 7 years ago, like that spreadsheet was a close second to hell. And the more we simplified the operation, like we just started realizing where our money was made. And like, if I'm spending all winter accounting and enterprise budgeting a CSA, I'm not getting anything else done. It was costing a lot of time to do that.
Mhm.
And we also we just wanted to stop doing CSA shares. But with all this information we pulled out, like it took 3 years of Hannah's time to like organize all this and get it together. We realized that we decreased our gross sales in half, but we took home $25,000 more that year. And that was simply because we sat down with someone who knew how to do this stuff and show us how to do it, and just were like, well, we don't have to hire 6 people. Like, it's just more profitable to actually do something far different. So,
Yeah.
yeah.
We, kind of going back into the chat questions, someone asked, what software are you using for enterprise budgets, spreadsheets?
It's
And
a Google sheet. Yeah.
yeah, how did you create it with help from Jed Beach in particular? I'll
Yeah.
make the
I,
plug
I
too.
didn't, all the credit is my wife and Jed. I just showed up and filled it in. Like, they built it, and it's insane.
Yeah.
Yeah.
Our farm just worked through Maine Farmland Trust with Jed to build a unit cost analysis for our wild blueberry operation, which is also an enterprise budget. And it's insanely massive. You couldn't print it out on 10 sheets of paper, but the information, like you're describing, that's where it carries so many details. You can allocate certain items for a percentage of, we hand rake and we machine rake berries, so there's different costs to
Right.
hand raking opposed to me. So we just look at a field like, okay, through this spreadsheet, you allocate half the field was machine raked, half the field was hand raked, or whatever percentage, and it gives you, insights into details which may or may not live in your profit and loss or your balance sheet or anywhere else, but
Right.
really
There's
gets.
just separate accounting for you to make decisions with these other tools.
Yes. Yeah.
Yes. It looks like there's a question. This is an interesting, like, if you're producing more durable goods, in my case, sheepskins and wool products, how should you factor into your balance sheet as considering them as inventory? The only thing I can associate to that is like right now we have an extra 2,000 pounds of fertilizer on hand that we didn't need this year. We have some seeds bought for next year. So like that is an asset that gets carried over. It has value. I could resell it. And then also the balance, like we hold a lot of onions and potatoes for January and February sales. And I think that's how it would relate to these sheepskins and wool products that that someone asked about here. And I think because they're an asset, they just carry value over, like any government form will tell you that. What do you like? They don't ask you this directly, but it's like, what's in your storage? What's that value? So because then it gets accounted slightly differently because the expenses were in one year, but the sales were in a different year. And so that's where Becky, the accountant, steps in and handles it. Yeah. I wish I had a better complete answer for that.
Well, I'll add to it. I'm not an inventory expert, but yeah, you're right. Some of it will depend on where your calendar year versus your business
That's
year
right.
ends, the fiscal year. Most of us, and I'd encourage you to just keep them like January 1st to December 31st. There are some annual crops, which wild blueberries could be a good one, where you could argue, well, the business year starts in August with the harvest, but I keep it like January 1st to December 31st. So we're often carrying frozen blueberries past the harvest year,
Right.
December 31st into the next year. So that will live on your balance sheet under a category inventory as an asset. And you usually account for it on your balance sheet by the cost of production, not by the retail sale value. Now, this is getting into the weeds. And again, yeah, like Jim, I'm no expert, but I would also caution you against using QuickBooks if you use QuickBooks inventory, because that opens up a can of worms within QuickBooks. But on simple spreadsheets, that's where inventory usually lives in the balance sheet as an asset until it sells. And it will then, show up on your profit and loss statement as income that, wasn't part of that year's production, but your balance sheet, it will show you kind of the history of where it came from.
Right. And I think someone else is asking that. So these are all considered assets, like, I'm producing shelf stable dry herb products. So would those be considered assets until they are no longer fresh and good to sell? They're an asset as long as they have as long as someone's finding value in it. So like if your model is to, lenders will ask us, in particular, like the Farm Service Agency, when you borrow money. I do a lot of the lending side and Hannah does a lot more of the bookkeeping side. So the lender will say, well, how much money do you have? And you say, oh, I got this much in the bank and I got this much in my savings account. And then I also have like 46,000 pounds of potatoes in the cooler. They go, oh, well, what are those potatoes worth? And then they say, well, they're worth $1.23 a pound, and we assign a value to that. I can now borrow against them. They become collateral to the FSA.
Yep.
So if I don't pay my bill, in theory, they're going to come take my potatoes and auction them off to pay my bill. So they are an asset, because if you were to say sell your farm the next year and there was all this stuff in storage, well, you're not just going to give that to them. You're going to sell them what's in storage, or make an arrangement for it to be sold by them, or something to that effect.
Yeah.
So
They have cash value. Yeah.
they have cash value, making them an asset.
Yep.
Yeah.
Yep. So it is kind of a sticky and confusing issue. And there are a few more comments about QuickBooks inventory is a disaster. And it's good to get some professional advice if you have these type of farm, durable farm products that live past your fiscal year, and that you took on the cost of production in this year, but you actually don't gain revenue till next year. Yeah, it's important I would advise you to seek some professional consultation on where that may live. But in general, it lives in the balance sheet.
I think if you get beyond like $25,000 in farm sales, you should have an accountant that you meet with like twice a year, just to get things right, and keep it going, and forge some relationship with QuickBooks, because that's what they're all using, and that's what the IRS knows. And Intuit's kind of a nightmare right now, because they're going through a lot of changes. Like there is no more support for desktop versions. You have to be online. So that's another like barrier for people to get into QuickBooks.
Yeah, the cost. I'll also just add that the complexity goes even deeper, say if you're a livestock farmer and you have breeding stock, which you're never going to sell. How do you account for that? And then when you cull that breeding stock or they die, how do you account for that? This has been part of like the training I did with Julia Shanks. We dove down all these little rabbit holes. And I'll just say that there's often, like I've said before, no right and wrong. There's just better places for it, and it can really be very specific to your farm and nobody else's. So in terms of like a webinar like this, giving the answers is going to be impossible.
Yeah, and like you were saying with the Schedule F, for whatever tax situation you're filing, at the end of the year, you have to be able to compile data that leads you to those IRS forms. But it's not necessarily the best data for you to make a business decision on.
Yeah.
So, like that data is necessary because Uncle Sam wants his nickels. But the other data is what you need to make sure you have the nickels to give to Uncle Sam. And people are always trying to like avoid taxes and do all this stuff. Just pay the taxes. You're paying taxes, you are making money. Like that is a pretty positive, like if it's one thing at the end of the year, you owe money to the government. You've produced some income that year that was positive, and then you have to dial in, well, how did I make that income? How did I lose? How could I have made more? Like the milk and egg sales, they're a complete loss. Farming isn't the best loss leader place to be, but like they do have value that brings people there to buy your other stuff. So how do you account for that?
Right. Yep.
And the last thing, like this all applies, like any grant that came out during COVID, you needed this information to apply for those grants.
Right.
Any loan you're going to need to buy anything, this is what the bank is going to ask you. I need a profit and loss, I need a cash flow, a profit and loss, cash flow statement, balance sheets. They don't need the enterprise budgets, but they're going to ask you how you got there. So you got to be prepared to like answer, how did I get to this? How did I get to all these projections and all these past stuff? So
that's awesome, Jim. I notice it's 7:30. We've used up our hour and a half. I'm sure we could go on. I feel like that's probably a great place to stop, especially just plugging what I mentioned at the very beginning. This is part of what I do. I am kind of a extension agent of financial planning. I find myself surprised that I'm in this position. I don't have an MBA. I only got here through working as a farmer getting through this kind of thing for 30 years now. So I'm available to anyone, in this webinar. If you're farming and you need some financial advice, reach out to me. And I can help. And at least if I can't do it, and I feel like someone like Jed Beach is better expert, I'll connect you to Jed and other people too. So I just want to throw out, on an end note, that there's help out here. And I'm one starting place for anyone who has questions or wants to see some of those slides in detail, or get a copy and look down, or share your P&L or chart of accounts with me, and I'll look over it.
I encourage everyone to do this. Everyone should be doing this. This is like such an important aspect of business. Like I started like living in a teepee, growing vegetables like with a hoe and bare feet, and like I just couldn't make a buck. And I had no idea where my money was going because I thought everything was groovy.
Yeah.
Really, we need to bring professionalism to the occupation and figure out how your business is running so you can continue to farm.
Yeah. I'm typing my email into the chat, which is nlindholm@mofca.org. So it's there. Yep. And I'll just end by saying thanks, Jim. It's just such a pleasure to share this kind of event with you and Hannah. You guys are, right in such a great place in your farming careers to kind of share what you've learned, where you're still looking to go. So thank you so much.
No problem. Excellent. Everyone have a good night.
Yep. Yeah. Well, and thank you all for attending. And again, we'll make this recording available to folks afterwards. Everyone who read